Good afternoon, Akhil. Can you hear me?
Yes, sir. Sir, hello, sir. Hello, sir.
I can hear
Sir,
you.
may I need participant call, sir?
That's my Adnan. I logged in from my brother's laptop because I'm recording the classroom for him to, because he's not there. Okay, so I'm going to practice all the past papers we discussed. Okay, and let's start. So you can see I'm going to practice all these past paper questions that we discussed. That I asked you all to do yesterday. I did not get the homework when I outlined and shared the homework. Okay.
Sir, කරලා යවන්නම් එක පොඩ්ඩක් මොකක්ද තියෙනවනේ.
No, it's fine. It's fine. You have time till the weekend. Okay. And Monday, basically. Besak on Monday. So you have time till then. Okay. I would like to have it by Monday evening, all these questions. So I'm going to go through these questions with you. Okay. And we'll share the recording. Okay. So the first paper we're going to discuss today is the 2020 winter paper. And then we'll discuss the summer paper. Step by step, we'll discuss each paper. And I'll be showing my answers as well. Okay, so I will download the winter 2020 paper, variant 22.
සර් අප්ඩේට් දෙකට පවර් කට් එක පටන් ගන්නවා මම හිතන්නේ.
Power cut starting
දෙකට ඔව්.
2 o'clock. Okay, let's see. Don't worry.
Sir,
What will
5
happen
hours
is,
කපනවලුනේ.
yeah, today 5 hour power cut. Unfortunate. What to do? So we have to manage. So you try and log in, but worst case scenario, I will practice all the papers and I will share the video so that you all can view it. So question 1 up to part D. Okay, so it's loading. Okay, so we'll start off with question 1A. Okay, so Dave owns a business selling furniture. So selling furniture is a business activity. This is always important. So selling furniture, this is a business activity. This is important first. Okay, we are the accountant for Dave. Okay, so the business owner is Dave. We are the accountant for Dave. Okay. Okay, so let's look at the transactions we have. Okay, so transaction one, on the 9th of August, sold goods on credit to Petra. Sold goods, which means Petra is a customer slash a trade receivable. Next, Petra returned goods to Dave. So as you can see, since Petra is a customer, and if a customer returns goods, this is called a sales return or a return in words. So that's how you identify whether it's a sales return or return or purchase return. You look at the other person involved in the party, okay? And in this instance, the other person is a customer. Dave is a customer, therefore it is a sales return. Banked cash sales, which is simply, if you have to explain banked cash sales, that means we took our cash that we have in our hand and we deposited it into our bank account. This is also called a contra entry because both entries will be in our cash book, the 3-column cash book. And then finally, Petra settled our outstanding balance on 1st August by credit transfer. So what did I say? The important point is credit transfer. Credit transfer means an online payment done from our bank account. Okay, and we have a cash discount of 5%. So this discount will be a discount allowed because again, how do you identify it? Who has the discount being given to? Who are the parties involved? That's been given to Petra. Petra is a customer or trade receivable. Therefore, this discount is a discount allowed. And these are all things that we have covered. I have taught you how to identify discounts. I taught you how to identify the returns, whatever return it is. So it's fairly simple. We're looking at a trade receivable account here. Okay. So first things first, part A. Complete the table to name each business document and book of prime entry for the following transactions. So I've taught you the books of prime entry. I've taught you 5 books of prime entry so far and the relevant source documents pertaining to it. So our approach to these questions is quite simple. You need to identify what type of transaction it is first. Based on that, you can identify the business document and the book of prime entry. So as we discussed yesterday, we take transaction 2. Petra returned goods to Dave. So now, as I explained earlier, since Petra is a customer and a customer returning goods is called a sales return, our source document is a credit note issued. So the answer here is credit note issued. A credit note issued is a source document used to record a sales return. So do you see the approach I took when answering these questions? First, I identified what type of transaction it is. Based on the parties involved, I could figure out whether it was a sales return or a purchase return. Since it's a customer and the business, that means it's a sales return. And I know that the source document for sales return is a credit note issued. Okay. And then what is the book of prime entry? The book of prime entry is the sales return journal. Got it? Next, transaction 3, banked cash sales. Now that's important. What the business has done is the money that they receive from Petra or whoever, their customers have come to their office and paid cash to the cashier at the office. And what the business has done is they've taken this cash and deposited it into the bank account. This is an entry into your bank account. Every time you deposit money into the bank account, what did I tell you the source document is? I told you can see this in banks. It's called something called a deposit slip. It's available in any bank. So you have to go, you have to fill out the deposit slip, mention that you're depositing cash, mention the amount, the breakdown of the notes, and you go to the teller. You give it to that person who's working in the bank, in the another teller in the counter, and they will deposit the cash. They'll fill out, they'll sign the deposit slip, and they will give you a copy of it. And the book of prime entry. All cash transactions go to a book of prime entry called the cash book. Simple as that. Next, transaction 4. Again, Petra settled the outstanding balances at 1st August by credit transfer. I say credit transfer. So now this is also a cash transaction, a payment made. So the book of prime entry again will be the cash book. Okay. So credit transfer is the source. What did I say? The credit transfer is a transfer made from a bank account into your, that is someone has transferred money into your bank account via online payments. And what did I say the source document for that is? I had given it in the note I shared yesterday. So let's just go to the note if you want to double check. Oh, wait, I haven't shared the note, sorry. Here you go. Okay. Any payments received to the bank account, there are two source documents. Deposit slip is for money deposit, records cash payments deposited into the bank account. And the bank statement or remittance advice records any credit transfers, online payments to the business account. Understood? So the answer is a source document called, what happened? Give me a minute. This is a remittance advice. Okay. And that is part A. Next, let's get to part B. Prepare the account of Petra for August 2022 as it would appear in Dave's sales ledger. So like I said, we know this already. Sales ledger has all our trade receivables / customers accounts. So yes, that makes sense. Dave Petra is a credit customer, therefore it will appear in Dave's sales ledger. Okay, so the first thing is in any ledger account, we know that we have to record the opening balance. Why do we have to record the opening balance? Because Petra's account is a trade receivable, which is an asset account. And assets, liabilities, and equities have opening and closing balances. So if you read through the question, we can see on 1st August 2020, which is our opening balance, they're asking us to balance the account and bring down the balance on 1st September 2020. So they're asking us to prepare Petra's account for the month of August. And you can see the balance on credit customer, Petra sales ledger account was 940 debit. That makes sense because Petra is an asset and assets have a balance brought down or an opening balance on the debit side. So the first thing we need to do is record the opening balance. August is the 8th month. So you put that there and we record this by writing balance brought down, and the amount is 940. Next, we'll record all the transactions that occurred in the month of August. So on the 9th of August, transaction one is a credit sale. So 9th of August, we know the double entry for credit sale. It is simply, sorry, I made a mistake here. The double entry for credit sale is the effect on the accounting equation. Assets equals equity plus liabilities. So assets will increase by 675 and equity will increase by 675 because sales is an income. So the double entry is you credit the sales account and you debit the customer account. So this will appear on the credit side, debit side of the customer account. The ledger account where the other entry will be is in the sales account, which records all credit and cash sales. And the amount is 675. There are no listed prices or trade discounts mentioned in this. So the transaction is done. Next, Petra returned damaged goods to Dave of 120. So a sales return, the objective of a sales return is to decrease income, and also at the same time, because a customer returned items, they are not going to pay us for those items returned, which means the amount that the customer owes us decreases. And since the amount that the customer owes us is represented through Petra's account, this trade receivable account, the asset decreases and sales return decreases income. The double entry to decrease an income is debit, a debit entry, whereas a double entry to require to decrease an asset is a credit entry. So the asset account is here. So this will be on the credit side. So on the 23rd, not on the 14th of August, we have a sales return. So the double entry is debit sales return and credit customer. So by debiting sales return, we're decreasing our income, and by crediting the Petra's account, we're decreasing our asset 120. That transaction is done as well. Banked cash sales. Like I said, this is simply you took cash from your hand and deposited into your bank account. There is no involvement with the customer's account. So the entry does not go to Petra's account. Finally, on the 29th, Petra settled the outstanding balance on 1st August by taking a discount of 5%. How much did Petra get? How much did Petra owe us in the beginning of the month? 940, and there's a cash discount of 5%. This is a discount allowed because Petra is a customer. So first thing is we calculate the value of the discount, which is 940 into 5%, which is basically 940 divided by 100, which gives you 9.4 times 5. So 9.4 times 10 will give you 94. Half of 94 is simply 94 divided by 2 equals 45, 46, 47. These are discount allowed. Okay, so we have a discount allowed of 47, which means the amount paid, actually paid, will be 940 minus the discount of 47, which gives you $893. So Petra paid us $893 because we gave them a discount of 47, allowed them a discount of 47, and that has to be recorded as an expense. So double entry to record the discount allowed is simple, debit discounts allowed and credit the customer's account. So this is on the 29th. We first have discounts allowed, debit discount allowed, credit Petra 47, and then we have to record the amount that Petra paid us. So we paid money, which means our cash balance increased. So you have to debit the cash book and credit Petra's account. How much did they pay us? 893. Okay, so when we balance this account now, it's simple. So I told you, you always put the total columns first, the total rows. I'm going to erase this. And it's quite simple. Okay, so the balance will be actually 940 plus 675. Definitely the credit side is higher, debit side is higher, so that is 1,575 plus 40, 1,615. Yes, 1615. Need to make this 1615 as well. Okay. So we have a deficit on our credit side. So balance carried down is on the credit side. What is the total? 675 minus 120. So 1615. It should be, the answer will be 525, and I show you exactly. So how do we balance ledger accounts? Our total is 1615. We have to check the credit entries, so minus 893 and minus 47 and another 120. So that gives us 555. Sorry, that minutes. So our balance carried down is 555, which means the balance brought down on the 1st of September is also 555. So that is part B. Next, we'll move on to part C. Okay, identify the section of Dave's statement of financial position. Asset, okay, so statement of financial position, the balance sheet, it has assets, equity, and liabilities. Again, assets should be broken down to non-current assets and current assets. So we know that Petra, okay, Petra is a customer or trade receivable, which is a current asset. So this will appear under the current asset section of the balance sheet. Next question. Dave allows his credit customers a cash discount of 5% for prompt payments. He is considering reducing this to 2%. They're asking us to explain an advantage and disadvantage of this proposal. Okay, so in our earlier, I explained to you all, when the business gives a discount to a credit customer, it is a discount allowed. And a discount allowed to a business is an expense. Therefore, what are the implications of reducing an expense from 5% to 2%? So obviously the first advantage, it's not really that hard to understand. You're reducing your expenses because you're reducing the discount rate from 5% to 2%. So it will reduce Dave's expenses and therefore increase his profit. A disadvantage of this is what? So see, the reason cash discounts are given is to encourage people to take the discount and pay faster. And obviously by reducing that discount, what will happen? Less customers will take the discount because now they'll think, oh, okay, 5% was worth it, but 2%, not really. I'm not really saving up on much. Because sometimes for people to make the payments, they might have to borrow money. So they'll do an analysis and they'll see, okay, if I borrow money to pay this off and take a 2% discount, it will probably cost me more because I'll have to pay more in interest. I might as well take the 30 days and settle it, or whatever credit period and settle it. So the disadvantage of reducing your cash discount is it may discourage customers from taking the discount. Therefore, delaying payments. That means they'll take longer to pay. This means customers will utilize their credit period. Your objective of giving a cash discount is telling the customer, listen, I know you have a 30-day credit period, for example. Don't take it. Pay me early, I'll give you a discount. So by reducing that, customers will utilize their credit period. They'll be discouraged from settling it early and they will utilize their credit period, which means the company it will take longer for the company to collect money. So that is question 1. Okay, so I will share that on the group.